Welcome into a daily editorial here on the KE Report, and most likely the last daily editorial of the year posted on our website, besides the weekend show that is going up tomorrow. And you know what? I think I saved one of the best for last with our good friend Jordan Roy-Byrne, the founder and editor of the Daily Gold. As Doc and I have been chatting this year, Jordan's technicals have lined right up with what Doc has been saying, and even, you could argue, a bit more accurately with some of the levels that Jordan has been sharing with us. And Jordan, that's why I appreciate you taking some time at the end of this year to share your thoughts on this rebound that we're seeing in the gold sector. I've been reading over your work, and I've been sharing the same thoughts, and those mostly revolve around how encouraging this end-of-the-year rally has been for gold and the miners. It's come almost perfectly, again, on the back of the Fed rate hike, and again, pretty much at the end of tax loss selling. But today, we're seeing gold up above 1,300. It's only the second time this year that it has gotten above 1,300. Let's just get your general comments on, again, how encouraging this move is, and almost surprising that it's even gotten so far at the end of the year.
Yeah, Corey, thanks for having me on, and thanks for the kind intro there. Yeah, I mean, I was expecting a bounce back into January, but really nothing this strong. I mean, GDX and GDXJ, I mean, they basically, the decline that we had at the end of the year, they basically stopped within 1% of my downside targets, which were about 21 for GDX and 29.50 for GDXJ. And that doesn't always happen. Sometimes you have targets and, sometimes the market hits them or it goes, way below or way past. But anyway, I had upside targets for this rebound, and the miners pretty much blew past those targets, I think, within 4 or 5 trading days. So, I mean, this is really what you want to see, Corey, coming off of a low. You want to see this type of strength where the market has, strong up days. You see those strong white candles on the daily charts or the weekly charts. And, a little bit of this has been, I think, a tax loss move when you get you kind of get the boomerang effect of that when tax loss selling ends. But if you look at GDX and GDXJ, those are larger GDXJ, those are larger juniors, and GDX, of course. I mean, those are the largest mining companies. There's a few royalty companies in there. But if you look at the charts of those, I mean, they didn't really fall down to new 52-week lows. So they're really in some juniors and in some of the smaller juniors, it is a tax loss selling rebound. But I guess what I'm saying is when you look at the bigger, the ETFs, really where is the big money in this sector moving, the rebound has gone through resistant targets, and it's been more than a tax loss selling move. And I'm just very encouraged with the move that we've seen. And then we can also bring gold into the equation. I mean, we were talking about it beforehand. Gold's up over 1,300 today. I figured it would stop at 1,300. I put out an update yesterday. Gold is getting very close to resistance at 1,300. I mean, there is some resistance around 1,310, so it's possible that we could see some selling come into place around 1,310. GDX and GDXJ, I mean, they both have taken out their 200-day moving averages, which is good. Now, the Huey Gold Bugs Index, which we normally don't talk about, that's basically the miners, but that doesn't have the strong royalty companies, which GDX has. And the Huey, I haven't checked it this morning, but coming into today, I think it was 1% off its 200-day moving average. So in any event, Corey, I would not be surprised to kind of see a pause in this rally, maybe a little selling as we start the year, perhaps. But really, I don't foresee any really major snapback. I mean, this looks like a pretty strong move, and I'm encouraged, as we have said, and we'll see what happens. I mean, maybe after a pause for a week or two, the sector can try and make another leg higher.
Hey, it would be even more encouraging if the sector could get pretty quickly above that 2017 high of, well, right above 1350. I think that high was about 1362. So that would be great. Again, that's another about $55 up from here. But some of the background indicators are also, you would argue, very encouraging for gold, wouldn't you, Jordan? We can look at sentiment and some of the COT reports where we're seeing an unwind and some of the net short positions from the commercial traders. But you also follow the put-call ratio on GLD. And again, you're seeing some more, and these could even be called fundamentally stronger moves in this background data. Can you share that with us, please?
Yeah, well, GLD, I mean, I track the put-call ratio, and the data that I track for GLD, I also track it for SLD, but for GLD, it's really been a much more accurate indicator. I mean, there's so many indicators that analysts can use that you really need to follow the ones that give good signals and that are reliable. And I found the GLD put-call ratio for me to be fairly reliable, and that actually a couple of weeks ago spiked to a 2-year high, actually the highest level since I think August 2015. And so basically when you have the put call ratio spiking, you have a lot more puts being traded, so that reveals kind of negative sentiment or pessimism in the market. So we saw that, and at the same time, let's talk about the COTs, the net speculative position, and I track them as a percentage of open interest because it gives me a nice consistent reading over many years. And now for silver, the net speculative position was at a more than a 2-year high. Actually, it was at its lowest level since August 2015. So you had basically the least, you could say the most pessimism or the least amount of bullish sentiment in the silver market in more than 2 years. Now, gold's net speculative position was not quite as low as where silver's was, but it was still fairly, I mean, I track these in terms of percentages, and I think it came down to about 26%. And the 2016 high for that figure, I think, was around 55%. I think at the recent peak, when gold got up to 1360, I think it was 47% or so. So as far as what that tells me for gold, that tells me that if the speculators want to jump in and push gold a lot higher here, there's room for that to happen. I mean, there's room for gold to break above 1300 and continue up to, maybe 1360, maybe that 2016 high in the 1370s. There's room for that to happen before sentiment gets really extreme. But we'll see what happens. I mean, who knows? Maybe it goes to 1310 and then it pulls back and consolidates for a couple of weeks, and then you get, more speculators come out of the market. But in any event, Corey, the sentiment indicators that we've seen in recent weeks, I mean, what they're telling us is that speculation has come out of this market, and there's just not a lot of bullish sentiment in this market. And I mean, that's a very good sign. And just on top of that, when looking at the price action of the miners and also the metals, I mean, they've spent the last 12 months or so grinding, consolidating. It's been a real grind, but they've not been able to trade to new lows. So, I mean, after the strong rebound we've had in the last couple of weeks, I mean, that just tells me that there's very few sellers left in this market. Very few sellers left in this market. And I mean, that bodes well for this year. And eventually, if we can grind a little bit higher, stabilize, build up some positive momentum, the sector is going to be in a position to break out. I don't think it's going to happen in the next couple of months. I hope I'm wrong about that. But as we talked about beforehand, Corey, I think the breakout move is more likely to happen around the middle of the year, maybe a little bit sometime in the summer. I mean, who knows? Maybe in the early fall. Maybe it'll be in the spring. I don't know. But I just like what we're seeing right now. But I don't think we're quite at the start of this breakout move. I think it's probably going to come several months down the road.
Okay, the second half of next year is what a few of us have been looking for that breakout attempt, but there is no doubt when you look at the longer term chart, even a monthly chart, you can tell that low in 2015, we're now 2 years away from that and a couple $100 above that. Plus, we've consistently been putting in higher lows, and yes, we haven't been able to break out huge to the upside, but we continue to trade in that higher part of the range. And as we move into 2018, yes, we are seeing some more optimism, but again, we need that breakout how crucial is it for you to see gold and even the miners break above that 2016 high that we were unable to break out of this whole year, but again, have traded close to it in the higher part of that range?
Well, it's very crucial, Corey, because you're just not going to see a real bull market type of move until we break above that. I mean, you go back to the last year, and I mean, there has been opportunities in individual stocks, but I mean, a lot of stocks have made massive moves, but then they've corrected 50%. So it's really been a trader's market. I mean, in a bull market, you have corrections, but the market shakes off the weakness, trends higher, makes a higher high, and you know, the cycle repeats itself. And we just have not had that for a while. And if gold can take out the 2017, 2016 highs and break above that 4 or 5 year resistance, you know, we see the miners doing the same thing. I mean, that is just going to trigger a very, very strong move in the sector. You know, the likes that we really have not seen. Probably you'd have to go back to, you know, late 2008, early 2009. I mean, 2016, that move was fantastic, but that was only a 6-month move. I mean, it happened, and by the time you realized it was happening, it was over in 3 or 4 months. And again, there was still this past year. I mean, there's still plenty of opportunities in individual names, but you know, you really have to go back to 2010, 2009 to find this sector trending higher for more than a couple quarters at a time. I mean, the moves have just only been 3 or 6 months long, and if we're able to break out, get above that resistance this year, I mean, we're going to see a very strong move into 2019 and probably throughout 2019. And I mean, if it happens, you know, if that breakout move happens in the middle of this year or a little bit after that, this is still going to be a very strong year. I mean, once we get to the end, but just with the way things are setting up, you know, once we get that breakout move, I mean, that's going to trigger a move for, you know, probably at least a year or two. It's not just going to be a 3 or a 6 month thing, because that's all that we've been able to enjoy in recent years. So yes, I mean, it's very crucial that we see the market break above those levels. But as you were noting, Corey, the first step is really, you know, let's see the metals and the gold, specifically gold and the gold stocks. Let's see them, you know, trade at higher levels and then digest these gains, consolidate above, you know, the 200, 400-day moving averages. Because when we see that happen for a couple of months, several months, then that tells us, you know, the market is strong, it's holding the gains, and it's starting to build a little momentum. Then it's in position for that breakout around the middle of the year, a little bit after that.
All right. Hey, Jordan, always interesting comments. Again, I appreciate you sharing your insights on pretty much a weekly basis with us. Again, go check out Jordan's website at The Daily Gold. And just to wrap us up, Jordan, I know you're down watching or going to go to the Fiestival, Penn State, Washington. Hey, I know you're a Washington fan, so go Huskies and have a great day and a great end of the year.
Hey, thank you so much, Corey.